Welcome to Inspiring Business with your host, Mark Bullock, who is the co-founder of videosocials.net and of videointerviewpodcast.com. In every episode, Mark interviews business and organizational thought leaders who share their stories of how they inspire others by making a difference. You can find this show on videosocials.net and YouTube, LinkedIn, Facebook, and almost any podcast platform of your choosing.
Greetings and welcome, everybody. And today I am really happy to have Neil Pedersen. Neil is a longtime client that we've been working with for a number of years, and he is one of the owners of Pedersen Sons Surety Bond Agency. This is a bond agency that's based in New York but provides services nationwide. Great to have you, Neil. How are you?
I'm doing very well, I'm doing very well, Mark. Thank you for having me.
Of course. So I always like to start, Neil, before we jump into, what are surety bonds, these types of things, into, what's your story? Because it's not kind of a field that you would think that people just kind of fall into, right? So how did you get into this kind of business, and what was your background before getting into it?
Well, ever since I was a little kid, it was always my dream to be a surety bond broker. It was, some kids want to be a rock star, others want to be a cop, and I said surety was the way to go. Now it's a family-run business, so I was, always sending out mailings, maybe filing some papers for my father throughout, my teen years, every now and then when he needed help, and childcare consisted of me being on the office floor, growing up, and I had an idea about it. I never wanted to go into it, so it wasn't the goal. During college and I guess towards the end of high school, I was periodically helping my father out with stuff, and on the side, I was actually working for a bail bondsman at night. So it was kind of an interesting education on underwriting. And I was able to kind of craft the two and apply some of the best practices that I learned from my father, another mentor, to give me a skill set to go into another business. And that was always the goal. And as I started working for my father and getting a little bit older, I was 20 years old really when I started actually working in a more of a full-time basis and going to school at night, which was very difficult. I had realized that there was some technology improvements that could be used to, lessen the amount of work, increase productivity, and allow us to have more time to be significantly more responsive to clients. And I accidentally generated a lot of business. So as I was getting into my, junior and senior year of college, at night, sometimes during the day, doing all this stuff, I started to build a client base. And it was probably the goal for my first 2 years in the, after, college. So it'd be 4 years in the business of actually getting a job. And the job market was very tight. And I was looking at working somewhere where I would make a significantly lower salary. And I decided at that point to, stay working with my father, building the business. And it was a really rewarding experience to have a father and son relationship where we get to see each other on a regular basis. My father's still employed here. We now co-own the business, but it's nice being able to say, like, Dad, do you want to go grab a sandwich or go have lunch somewhere? And it's, a Tuesday. Very few people out there can do that and have the opportunity to. So
absolutely.
That's how I ended up in surety, and it turns out I like it. I'm pretty good at it. It's not a bad career path.
Absolutely. And one of the answers to the questions I often ask, what inspires you, or who or what inspires you? And you said family. And that honestly tells me all I need to know, because I was watching one of your videos recently, and we're going to have links, folks, to Neil's website and LinkedIn and YouTube and those types of things that are going to be below. But one of your videos was talking about, time is incredibly valuable. You don't like people wasting your time. So you want to make sure that you're not wasting your client's time. You want to get it done right. You want to get it done quickly, and you want out of the gate have it work. And I know that your practice is growing exponentially because of that commitment to getting it done right the first time, and having that family grounding behind you, because then you're not just doing the mechanics of underwriting. You're doing it for people, because you're a real person, and you know that your clients are real people that have are often in a very, very stressful situation. So why don't we get into that a little bit? I mean, for somebody who doesn't know, like me, what a surety bond is, what is surety?
Well, surety is one of the oldest industries in the world. It's really where a third party guarantees the actions of another. And that's a simple oversimplification of it. Generally, either what I do is a lot of it's focused on court cases. So there's different litigation between two parties, and one of the parties needs a guarantee that they'll pay the other party a sum of money if the case basically goes against them and not in their favor. So I'm extending credit or issuing a financial guarantee of payment. And unlike, let's say, an insurance policy where you buy homeowners insurance, there's an accident and the insurer pays for the damage to the property. With a surety, if the one party doesn't pay, we actually have to go in and make the other party whole, but then we turn around and subrogate against our client or sue them to recover the cost. So surety is really just extending credit. Now, outside of court cases, there could be a license or permit issued by the government, whether it's a county, state, federal entity, and they may say, as a requirement of the license, you have to get a bond for us to even consider issuing you this license. Or let's say you're bidding on a government contract. Now, the government awards a lot of contracts, and to qualify the contractor, they can't review everybody's background and to see if they could actually fulfill the contract. What they do is they really transfer that duty to companies like myself, where we qualify the contractor to perform the work, whether that's providing maintenance services at federal buildings or building a military base, right? It could be any type of contract, and they give that contract, and we guarantee that they'll perform that contract, pay their suppliers, subcontractors, wherever else falls into the mix. And if they were unable to build it or unable to perform the contract, the insurance carrier that I represent, which I'm a broker for, would come in and pay it, perform it, or make them whole. So that's really what surety is. It's a guarantee to make somebody whole, and usually a government entity is requiring it.
Far, far more in depth than I realized. So in essence, you're kind of doing a background in that kind of circumstance. You're kind of doing background checks. You're doing the due diligence of making sure that this is a trustworthy, has a track record, is going to do the work, and then the flip side of that is, if they don't, if your risk management didn't come through, or and they don't do it, you're there to make sure that, in this case, the government agency or whatever it is, the court, whatever it is made whole. So
that's correct. There's the three C's of underwriting: character, capacity, and capital. What's their qualification? What's their background? Is there anything in their background that would give us cause for concern? And then that's to qualify their character, their capacity. Are they able to perform the work? And then capital, do they have the funds to perform the work? Are they going to be able to withstand or sustain a interruption in their business or correct the issue financially? That's really what we look at.
So that kind of leads me to wonder, then, how does a typical surety bond department work?
Well, a lot of surety bond departments are at large insurance brokers, and they, the producer gets the request, emails it over to a placement department, who sends it to a surety underwriter, who then sends it to maybe an individual at that surety department. And you have these email chains that go back and forth. And then a couple days later, someone reaches out and contacts you, and they may have experience with that matter, or they may have no experience of that matter. And the go-to item that's requested is that they send out a bond application. Sometimes it's 1 to 4 pages and applies to 4,000 or 4 million different types of bonding. And so you get this bond application, you fill out the paperwork, you send over, 10 different documents, and then hopefully they'll find somebody that has a background in this type of bond to figure out how to place it. And what we mentioned earlier is that word time. That all takes time. And then its clients are wondering what's going on, what's happening, where does this stand? Now, where we differ is that we have a lot of experience with these different types of bonds, and maybe they're called something slightly different, but we're willing to listen and communicate with our clients, where we get to find out what they actually need, right? So there's a word called performance bonds. Everybody loves to say, I need a performance bond. And that word kind of encompasses, 800,000 different types of bonds. Well, if I listen a little bit longer, I could find out what they actually need and say, okay, well, I have this company that's willing to underwrite that because they have a lot of experience with it. I don't need to send them a bond application or request, 25 different documents. I know exactly what we need. Right. Or maybe it's 3 documents, a financial statement, and we have a conversation at the onset, and then I could send a follow-up email with a brief little list of, this is exactly what I need. And then we could skip that, item going from this department to this department to this department, and that time, span of 2 to 3 weeks to get an answer of, no, we don't do that. or yes, we can help, but.
Right.
So it's, some agencies love to approach 15 different companies or 4 different companies, and they turn around and say, well, these companies can't help. Now, I've seen that a lot where larger companies farm out business to my office, where if you have about the top 5 to 7 surety companies in the world are extremely large insurance carriers, and they dominate a large part of the business. But there's another 100 carriers out there that are financially sound, they're A-rated, they're strong companies that may specialize in a specific type of business. Now, the top 7 have been around the longest. A lot of surety business renews that you get paid every year, similar to an insurance policy. So these companies built their books of business 50 plus years ago. They haven't been growing. They haven't been getting that much bigger. They kind of stay the same. And so a lot of brokers approach the top 7, and they don't have a appetite for these risks, and they can't place it. And then they say, well, these are the 7th largest companies, and they all said no. Well, some of those companies had no thought or chance of entertaining any of that business. So essentially, why approach a company that's going to say no from the get-go? Why don't we go to a company that's going to say yes? Or maybe approach 2 companies and have the 2 companies offer different terms. And they may rank somewhere between 20 and 25 on the top companies, and they charge similar prices. There's similar creditworthiness, and they fulfill what's needed.
Awesome. And I appreciate you taking the time to have this conversation with me, because I know you're growing like crazy, and I know you're obviously the phone's ringing off the hook, and you're carrying that right now. That's awesome. So I already know the answer to this question, but where do you feel that you add value to your clients? And I'm just going to say up front, just based on what you've said so far, and how I know you is that you're thinking outside the box. It's a self-imposed box that some of these other companies are dealing with, because it's like, oh, if it's not one of the top 7, well, then it's not worth our time to mess with it. Well, the reality is that there's hundreds of insurance companies out there that might be a good fit for this. You're helping people actually find what their best chance of actually getting what they need.
That is correct. And a lot of companies have a lot of different parameters. Now, something I'm becoming across a lot is what's called reverse flow business, which is when you have an international company that's operating in the US.
Mm-hmm.
They need different types of bonds. And sometimes they approach their broker that they're using, and they don't know where to begin. This company is based in Korea. This company is based in Australia. This company is based in the UK. Do they qualify? Who do you contact? Now, there's certain countries, like let's say a Russian company or a Chinese company without substantial U.S. assets, they're not going to qualify for the bond. But if I hear that maybe Western Europe or South Korea, Japanese company, there's different international surety companies that could easily take their indemnity, perfect their indemnity, and have a bond issued for them, so that they can actually get it. Right. So that's been a major area where we've been adding value. The other thing that we like to do, which I find it to be very unique from a underwriting perspective, we're agents and brokers. We're actually not supposed to underwrite, but we have a very long track record underwriting complicated pieces of business. So we look at what's called bond risk. Now, I mentioned earlier there could be over 1 million different types of bonds. All these different types of bonds have different levels of risk. Right. Now, if we look at one bond form that says if at any time, let's say the state of New York demands payment, you have to tender the payment within 2 to 3 days, that's a very high risk bond. Now, let's say there's another bond that says pending the determination of a administrative hearing and all appeals, you may have to pay the state of New York. That risk can be spread out over 5 years. That may have less of a bond risk, right? There's a higher duty, or we deal with some trustee matters where the trustee bond, which guarantees the trustee's action, it can be for a criminal conviction is the triggering point. Now, let's say a breach of a fiduciary duty versus criminal conviction is 2 vastly different duties and levels to make a payout. So if we can underwrite both the bond risk, the company risk, and look at the actual 3 C's, the character, capacity, and capital, we can find a lot of companies willing to provide bonds for people that would normally be unable to obtain them if they just went to, let's say, the largest companies in the industry.
Right. So all that said, I mean, do you have advice for somebody who's seeking a surety bond? I mean, my advice would be call you.
It mostly is to call me. But the advice is line it up ahead of time. Right. Scrambling at the end of the day to obtain a bond is never a winning strategy. I like to think about best practices in business. If you're bidding on a contract in July and it's going to be awarded in September, start working with your bonding company in July, whether it's me or somebody else, right? If you find out you can't obtain the bond, why are you, mobilizing people to come up with a bid?
Right.
Figure out what your margins are and how to actually bid to win the contract if you're not actually going to be able to obtain the bond to perform it. So I see a lot of times clients come to me, with 1 or 2 days before bond's needed, and they say, what can you do? There's a large amount of times that we find something we can do, whether the client finds it favorable or not to them to move forward with it, we at least try to give them options. Now, that could have been a much different conversation, 2-3 weeks beforehand. They could have had 20 different options. Something I see a lot with, let's say, appeal bonds. A client is a wealthy individual. They don't qualify for the bond without collateral. They find out that they could pledge non-retirement account, brokerage account. That may take a couple days to do between getting the account pledge from the wealth manager, having it executed by the proper parties, and then having the account coded to make sure that there's a pledge on it. Mm-hmm. Now, we're securing that collateral. That may be 5 days, 7 days, 8 days. Well, if you know you're going to need this bond, you might want to work on it 2-3 weeks ahead of time. I had another client where they wanted to use real estate as collateral, and similar to a court case, the court gave them an extra 2 weeks to get it in place. And that was plenty of time to do it. But relying on the court to grant an extension is never a winning strategy.
Right.
And something, which is readily brought up by the party, considering giving the extension, let's say the judge, why didn't you have this lined up ahead of time?
Right.
You don't want to be sitting in a situation where you don't know how to respond, or you do not have an adequate answer to give the party asking that question. So it's give me a call. Let's start working on it today. And one of the things I love to point out is I get paid once the bond's issued. So if someone calls me and says, Neil, I need your help, your opinion on this. Do you got 20 minutes? Do you have 2 hours? The answer is yes. Let's sit down and discuss it and see what we can do for you. If you do not move forward with the contract, you don't move forward with my office, we're not charging you a fee to talk to you. And I see this a lot when a client calls me and they say, my attorney thinks it costs 10% to get a bond. Well, all bonds are priced differently. It's probably closer around 2%. Sometimes it's as low as 0.25%. That's vastly different than the 10% that the attorney said. So calling someone who's knowledgeable expert to give you an actual price or an idea, a range of what it's going to cost you and what's required is invaluable. So going in with a qualified person to give you actual appropriate responses is what I would look for. And
start early, and start having those conversations early, because it's like anything else. It's like you don't want to wait until you need an insurance policy and before you buy the insurance policy. Well, this is a little bit similar in the fact that you're not going to get the contract. You're not going to get out on bail. You're not going to get whatever it is that you need. If you don't have the bond that you need. And so, the sooner the better that you start researching what is it going to take to get, what are my options, et cetera, the more, as I think you alluded to, the more options that you have, and the more flexibility is in play versus it's got to be now, it's got to be done in a week, or it's got to be done in a number of days. Really puts a lot of constraints that just aren't necessary, that wouldn't be necessary if they got going early. And oh, by the way, being willing to have a conversation about what you actually need, rather than, hey, I need a performance bond because, one of the advisors, one of the attorneys, whatever, that's the only word that they know. So they think that's what they need. Well, what type of performance bond, right? Right. So, really, really excellent, Neil. So, I did want to take a moment. How we know each other is that you're a member of Video Socials, and you haven't been super active with it recently, but you're growing, and client service always comes first. At the same token, you have got a number of videos out there, and again, I'll have links below for that. The best way to get in touch with you, of course, is your website, Court Bond Now, and we'll have all your contact information available as well. But you were involved for a while with Video Socials and creating, short videos to kind of share knowledge, share experience, give some tips and ideas, and let people kind of get to know you before they ever pick up the phone. That's kind of what Video Socials was designed to do. We get together in typically 5 to 10 people in a group, and we take turns recording our 2-3 minute videos that we're using on our websites and social media, et cetera. And we do it together so that it becomes a social thing. Instead of talking to this inanimate object called a camera, we're having a conversation with our kind of built-in audience, as it were, and we're getting feedback from that audience. We're learning from each other. It's an experiential program. But what was your experience like with Video Socials, Neil?
Well, I think it was a very positive experience. And one of the things I want to bring up is that there is, obviously, media takes different forms, and advertisement and having your name get around out there. I find that some of the I guess, older generation than me. I'm 33. So explaining to someone that if they have, different clips that pop up on LinkedIn and they have 1,000 connections, maybe 200 of those people will see the connection and think, oh, they're top of mind. And then maybe a couple weeks later, they may need something that you could help them with. They can send you a referral. So for me, I liked using it to stay top of mind. The other thing is I also like having some sort of actual presence that people get to see and feel. Gives a little bit of more of a human element and get to know me a bit better. And like you said, it's like a little clip into you. And then lastly, I love that you brought up the social aspect. A lot of us spend a ton of time in our office. And if I had to, I guess, talk to myself into a camera and be continually reviewing it and trying to tweak it and see if I can give myself criticism, I don't think it's something I would keep up with. But the connecting with others, working with others and having some sort of feedback from your peers or even possible people you can network with seems a lot better than going alone or just doing it myself. So I like the feedback. I've received some business from what I've done. Is it a ton of business? No, but I'm also looking for a 10-year track record of growth. So it's the business I do pick up, can be paying dividends for the next 10 years. And I'm still trying to fine tune my own marketing strategy, which video socials is definitely going to be a big part of it.
Awesome, Neil. Well, thank you. So we'd love to have you as a guest, folks. If you have an interest in doing videos for YouTube, for your website, for your email blast, et cetera, just go to videosocials.net and click the guest tab at the top of the screen. There's no cost, there's no obligation, and it's a judgment-free zone. We all learn by doing, and we learn together. So just to kind of close up, if I may, Neil, when I think of bonds in the past, I have thought really having to do almost exclusively with court cases. And what you're indicating to me is that's just one element, whether it be contracting, whether it be service providing, whatever it is. But is there a big difference there? I mean, I know that you do all types, right? I mean, but is there a big difference there in what those clients are like to work with? The stress that people, I can only imagine that there's
a major difference. I mean, for the most part, keep in mind when you're dealing with court cases, it's probably large corporations, litigating with each other, and they have stronger balance sheets or well-to-do individuals that are, I guess, more well-versed in risk and stress than your average citizen. But it's completely different than construction contracts or other performance contracts. We've really expanded into them because it's probably about 90% of the industry. And then we felt that we're coming across a lot of clients that their needs weren't being met. They weren't able to obtain bonds through whoever they were working with, and coming to us and us finding them a home seemed to be, a good business model. So we keep on continually growing that as well. So it's clients are happy, but it's completely different underwriting. You're looking at a lot of different ways of trying to get the client qualified for the project than compared with a court case that can be a little bit more cut and dry.
Right. And I can only imagine very stressful. And thank you for being there for them, because I know that many times that when they're reaching out to you, it's like, I got to have this, I'm dealing with something really stressful here. So I know you to be really level-headed, calm, cool, collected, and you work the problem. So I appreciate who you are and what you do from that perspective. Any final words or suggestions that you would have for people? What area are you really focused on right now? What's the fastest growing area for you?
Fastest growing area is still court cases, but we also love that international client that's trying to establish a presence in the U.S. and they need some practical advice for their surety business. That's a really good area. We also find that to end on, there's a lot of things called money transmitter licenses for a lot of crypto companies. Really, the market for these licenses has cratered. So these companies are being told, basically, you need to replace our bonds or put up $10 million, whatever it is. And so you have companies that are scrambling and they're not happy with the current company they're working with. So that's been a really fast growing, expanding area where we can come in and help clients out and find them a home when they're in the middle of a crisis. So that's been an area where clients are looking to come over from a larger broker to a much smaller boutique that could maybe advise them and show them where they should look for a home.
Awesome. And again, folks, it's Court Bond Now, Neil Pedersen, and we'll have links how you can connect with him on LinkedIn. Take a look at a couple of his videos on YouTube, etc. Will all be at the bottom. Neil, thank you so much. I'm always it would seem like such a dry topic, but you make it so interesting. It's very intricate. It's very detailed, and I appreciate the fact that you've got such a good grasp on it, and that your core values are about trying to help people get what they need, and kind of cut through some of the bureaucracy that you open with that the typical person might try to deal with if they were working directly with an insurance company, as an example, or working with somebody that's just, well, let's submit it here and see what happens, so awesome. Thank you so much for being on today, for taking the time, and we'll let you get back to your client's phone calling you.
Thanks, Mark.
Absolutely.
You've been listening to Inspiring Business with your host, Mark Bullock. Your positive comments, likes, and most importantly, your sharing of this show with others is greatly appreciated. Don't forget to subscribe to the Inspiring Business Podcast on whatever platform you prefer. You can catch prior episodes on videosocials.net and on YouTube, LinkedIn, Facebook, and all the major podcast platforms.